And good morning. This is the Hawkeye session. This is Thursday, December 10th. And trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion. That you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And having said that, let's go to the chart. And we're going to go and pull up a chart with the US. Oh, we just got one for the US yen. Let's take a look at that one while we're. Looks like the one for the US CAD is already pretty much broken out. And I'm not sure we want to take that trade at this point anyway. It's right now, it's breaking out on the bottom, but it's also trading at the bottom of a weekly, last week's low. And it's just been going kind of basing in between here. So we'll get back to that one later. It's not really going anywhere too soon, I don't think. If it does, we'll just chalk it up as one that we missed. And we have the US yen. Go to 15-minute chart. Clear off the chart. Let's bring just a chart up here. And we had a ascending wedge at 8 o'clock. And what we're going to do, I mean, basically what we do in this room for all any newcomers that are here, we're basically going to show you where to take trades, where not to take trades. A lot of times when I take the trades, I'll qualify as saying this is not one I would normally take, and this is why. I'll take the trades, and it'll show you why I do or do not take it. Sometimes I'm right, sometimes I'm wrong, but to maintain the methodology that we're using, we're trying to stay somewhat consistent, but also show you what not to do as well as what to do. Everything I take in here is on a demo platform. And so just keep that in mind if you were to follow along. And if I like the trade, I'll say I like this trade, and I'll take the trade and show you why I like it. Again, it may work, it may not. On this US yen, it's ascending. So we're going to be looking at a 15-minute chart. We're going to start with I like to see where the overnight high and overnight low is. This blue line over here is the beginning of the new day session. This usually happens right around 8 o'clock or 6 o'clock East Coast time in the evening. Usually on the, actually, to take that back, this one is around 5:30, I believe it is. 5:30 is where the new day starts. But this is the overnight high. This is the overnight low. And right now we're just right in the middle of the London session, about ready to just about an hour before the US market opens up. It was ascending, so we're going to be looking at the previous, as you can see, it's trending. Here's a higher high, higher low, higher high, higher low. So it is still trending in an upward direction. And this is basically a pullback. So we're going to draw a trend line. And we're going to see how this thing is trending. I'm going to draw it from the last pullback on yesterday to the overnight. Basically, this is the first pullback on the overnight session. And we can maybe take it back a little bit to see if there's a trend going where we can see like an anchor. This looks pretty good right here. Here's an anchor, here's a hit, here's a hit, here's a hit. This trend line is validated. As this thing comes down, we can expect it to bounce off of this trend line. And if we look and see where we have some support levels, we have these Fibonacci lines right here. Here's a blue Fibonacci. It's right now crossing over the red, and right in between here, you're going to see that these are about 60 pips apart, I believe. No, actually, these are going to be a little bit less than that. This is the US yen. These are about 20 pips apart. So right now you have roughly between the green and the blue line. Actually, I had the wrong red line here. Between the green and blue line, you have 34 pips, and you have another target area down here, which is another 34 pips away from that. So these are 34 pips. There's roughly 3 sections of 10 pips in between each one of these. This is a key area right in here, red the blue line. But right now you can see we're pretty much right in the middle of this trend. As this is ascending, we're going to we're going to spread this out, and we're going to see where here's the last pivot low. Here's where we got the alert, and you can see where it's right now testing the bottom of where the last pivot low is. It's basically testing this trend line. I'm going to be using this trend line mostly for whether it's going to break below or above. If it breaks below, we're going to be looking at coming down towards this blue line, which is pretty much right where this area of bouncing came through. So I'm going to use this this would be a target zone. And I'm going to see what kind of range we have between from the blue. If it breaks, is there enough room to come down before it hits this area here to get enough range? I like to see at least 12 pips to the top, and that's barely 8 pips. To the other side of it's 15. It would have to penetrate fairly deep into this, and I'm going to be looking at this as being somewhat of a trap area. Now you could take this trade and go short if it breaks down. I want to see a break, come back down, come up, retest the wedge, and then come back down into this area. And that would probably be where I'd be looking at exiting the trade. And then also, this would also be an area where I'd be more apt to take it long and then to take it short. And you can see that you have this area right in here that would be, you'd have to get through that in order to go any deeper. And there was a lot of buyers in here. That's what sent it on up. And so I'd be looking at, there may still be some buy orders right sitting down here waiting to send it back up again. And we can tweak this up a little bit where we got the alert. And so I'm going to draw a triangle up here. Here's a low. Here's the pivot high for the night, over the day. Tuck this in real close by and then bring this one up. And this is our wedge that's playing it. And right now it's breaking out of the bottom, but it's also testing this little trend line right here. Again, this would may be another trap area I would be looking at.
So Al, I've got a little different of a wedge. Okay. You see your small little wedge that you have, your this AC?
Uh-huh.
Yeah. Well, I brought it back a little bit more and I used that as my third hit.
Is this the pivot here?
Yeah.
Okay, you can do that too.
And then what I did is I actually took the trade as a short.
You did?
I did.
Okay.
So.
And let me take a look at something else here. And this is the US yen. And I can see why you would do that.
Yeah, so
this is a break. So we did have the break. Now we are on a 15-minute. Now we did not get a close on the 15-minute break. Let's see if we got one on the 5-minute.
Not yet. There's a minute 30.
Minute 30 yet to go.
But I'm I looked at it, my head's really clear right now. So but after I looked at it, I said, well, you know what? We're gonna use a tight stop. I'm comfortable swinging the VAT here. So we'll see what
okay. Well, we did have here, this is the trend line that he's talking about right here. Here's an anchor. Here's a hit. Here's a hit. This is confirms this trend line. Now this one got broken. Now I'm going to put this over in this area here because I'd like to see this. If it can get down into here, we got the main trend line coming up. So right now our trap area, what I call as a trap. Now this could just blow right through and come down to retest this. That would give you let's see, how much room do we have here? If we take this off the retrace down to here, we got 11 pips to the 30-minute 62, which is we have all our moving averages in the right direction. Yeah, this could be a good trade there, Matt. As I was explaining it, you were drawing it out and seeing what we have here.
Yeah, no, thank you.
And
we've got the cross of the 13 and 62 at the 1.
We had here's the break, here's the pullback. Now we do have, it is forming a little bit of a wedge here. This one, yeah. Say if you were to take this thing short, now would be the time to be doing it. You would have But I would be looking at using this area up here as as your stop area. You may want to
So
wait
let's
and
see
see.
what's going to happen.
Yeah, see what happens here. We got it's only 2 pips up to this. So we have all the moving averages are in the right direction. We have the green coming up here on the 1 minute. It hasn't crossed over the yellow. We had a wick up. If we get a closed red candle, I'm going to take this trade. And let me see if I can get my charts going up here in time to do that. So what I'm going to do is I'll set this trade. And we're going to go short with a stop. And we're going to put our stop somewhere, maybe right below this. So I'm going to use this. I'd like to see this a close below this red candle over here. I'm going to put a price there of 104.43. So 104.43 would be right about down. This is only, this is a US yen. So each pip is the second. I just put a sell stop below there and we'll see if it, see what it does. You may be able to move it up a little bit higher. I like to keep it, I don't want to get tagged in my fill before it actually gets to that price.
Yeah, that's not a good idea, right?
But it'll eat it, and as soon as it gets anywhere close to it, it'll just grab it. And right now, it's coming back up into the wedge. We still haven't got it. We still do not have a close.
So just to add a little bit of background to why I took the trade. So I saw the moving average crosses in our direction. And then I see kind of like downward trend at the lower time frame. So we'll see what happens. I kind of stopped watching my trades at the 1 minute because as Al says, it messes. Yeah, well, it's too much. I'll sit on the 5.
Sometimes it just messes with your head a little bit.
Yeah, the extra 2 pips you get for me is not worth it right now. So
I think once you get in the trade, I think it's prudent to get off that 1 minute chart once you're in it, and then use the 5 minute to confirm your exit area.
Yeah,
and just watch it on the 5 minute. Yeah, it doesn't play with your head quite so much.
Yeah, so we got a little bit of a pullback here, so we'll see what.
And we are looking for a bit of a sniper entry. Like. We're trying to just. So as this thing comes up, now that it's coming back up into the wedge on a 5 minute as well. Nice thing is we're not in the trade yet. It's coming back in. I want to see it come back out and close again outside the wedge. When the second close out, then I might be wanting to take this trade. That means a pullback. That means it found some sellers up here to try and refill. And right here, you can see this little, this is a big wick right here. I don't like that wick. It's a good wick to confirm that maybe it's made the high, and this may be just a pullback off of that. But I like to see this 5 minute close inside the outside the wedge area, the orange dotted line.
So you know what I like interesting about that wick that you're talking about? On the 1 minute, you can really see where the wick is. So on the 1 minute, it gives a pretty good picture that it bounced off the 1 minute 62.
This area, yeah. Right? This one right here. This is basically
and then it's all red all the way down.
And it came right on down. This is a nice strong move down.
Let's see what the other one, the other big wick over to the left more a little bit is. It's probably the same story. Yeah.
Actually, there's like 2 of them back to back here.
Yeah, and then over
strong
there,
move
there's
up,
that.
Couldn't hold it. It came back up again, couldn't hold it. So this is so there's a little bit of a trend going on with this one.
Mm-hmm. So if we draw a trend line, then we can have an idea that it's probably going to pull back until that trend line and then break to wherever it's going to go.
Could very well.
So this could be a better entry if you get a bounce off that purple trend line that Al just drew. If you're of the intention that it's going to go down. Now, I'm not predicting anything, but
yeah, as you're looking with this, you're seeing this is a little bit of a basing area. It dropped, it came back up, retested. Well, this is where we drew the trend line, and it's sort of like you have a red, a blue, and a red, another strong move out, and now it came back out. We had a nice strong move down, came back into this area. Now the question is can it hold? Are these moving averages going to hold? And if so, can we get us into a little better trade? Now, if this thing closes, they'll probably get me into this trade probably before it closes. But this is a nice little uh, drop basing retest area. We also have, like, so you also have this major trend line coming up here from the bottom. Now, if we were to the bottom top of the wedge, the trend line, right now we only have 5 pips before you're probably going to get a bounce off of this. But I don't really like this trade. I'm going to pull this trade. I don't really like it.
Not anymore?
No.
The story changed?
Well, there's not enough room till the major trend line bounce.
Oh, I know
So
you mean. So you don't think it's going to continue down past that?
We have a trap here. We have a major trend line now. Broke this where we drew
Where's
the
your,
wedge. It broke that one. But I look at this more of a trap than I do as a continuation.
Okay. So where's your Fibbo zones?
Well, that's good to show. Let's see. The Fibonacci's are.
Yeah, let's see where they're sitting.
Let's see where we have our 5-minute zones. Right there. Here's our 5-minute green. And the green's just above the blue. So right now, this is basically the demand area coming down into this demand area.
Okay.
I'd probably like to see it come down, close below this green fib line, come back, which should probably close below the blue trend line. So this whole area right in here I'm looking at is I'd like to see a close below the green, come back up, retest the green, and then come down to retest this area. But even
that's
with that,
30-minute 62, isn't it?
That's a 30-minute 62, which is always a good target to use, but has some traffic to get through. There's some traffic to get through. Right? It's got to get through this traffic in here.
So you have the first 5, if of the trap, and then another 5 into the 30-minute.
So you got 10 pips in there.
Yeah. So yeah, from this to here, you've got your 12 pips, but you have to be using this for a target. I think we're going to get a bounce off of this blue trend line. I don't think it's going to just blow right through that one.
That'll be interesting. I'm tempted to take you up on that.
Oh, that it will go to that?
No, that's going to slice through it.
Oh, okay.
Yeah.
I mean, it's probably going to go through it and then tag it on the 1 minute and then do whatever it's going to do. But I think our consensus is that it's going to tag that line.
Yeah, you also have the 15-minute 62 coming. If you put the trend line on the 15-minute, you got your 15-minute 62 right here as well.
Okay. But here's the other side of that story. Your moving averages on the 15-minute. I'm just trying to show a different perspective. Yes.
Yeah, well, absolutely.
So the 15-minute moving averages, if they do come down, if they all come down, they could cross. That's a big deal.
I don't think it's going to happen. I think it's going to wait. I think it's going to come back to the edge of this apex here a little bit more before it's going to break. I think you've got I think you have a few more candles before we're going to get that breakout.
Let's see. So on a higher time frame, I went to the 30-minute. I can't make it work. Scratch that. Oh, I did, actually. I made it work. Okay.
I do see the downward pressure. Now let's take a look at our RCS tools. We have a 2 and a 0. So we have basically the Japanese strength is stronger by 1. stronger by 2 here on that one, and we have stronger by 1. So basically, as we're looking here, and let's take a look at the higher time frame Fibonacci tool here.
So
right
on
here.
the 5th, yeah, go ahead.
So we have the U.S. yen. They're basically fighting for last place here. The U.S. yen is fighting for last place here. The U.S. yen is fighting for last place here, and as well down here. So right now, both of them are showing weakness. Now the question is, which one's going to persevere to float up to the top and get the crossover? And so right now, it's pretty much I'm not seeing a lot of strength, comparatively speaking, on the pair in general. So I see a lot of basing going on right now until one decides to break one way or the other.
So interesting observation on your 15-minute. If you blow up your 15-minute chart,
okay,
shrink your scale a little bit, and then shrink your quite a bit more. Actually, it's probably better on the 30-minute, but
okay,
I've got we're actually
at 30-minute.
Yeah, there we go. We're at like the top of a zone right here. So there's actually a significant trend line. This is that top, that D is actually the 4th hit on one of my trend lines from before that, like way back here. And then the bottom starts from where that moving average crosses over to the right a little bit more. Right there. All the way up.
Oh, this one up here.
Nope. Yeah, that moving average cross.
Mm-hmm.
But the bottom of the big wedge that I drew starts from the bottom of that down, all the way down to the right more. That next, right there. And then I just threw it on its way up.
Well, let's look this is the 3rd, 2nd, 1st. So this is the beginning of the new month.
Mm-hmm.
So let's just show the range that we have from the whole month of December right now. This is the high, here's the low. And we are in the top part of the monthly range. And I can see from that perspective, we're actually at so here's December 2nd, here's the 1st. So basically, as we pull this over to the 1st of the month, we're at right now, the month came in, it came out that the low came in first, and now it's retesting where the month started. So right now, this has all been from a monthly standpoint. This is the beginning of the month right here. So we had a high, a low, the low came in, and now it's retesting the high. And we come over to the left, the last high that it's been coming down. So I would be looking at retesting this high before it's going to break down to the bottom.
And if it does break to the bottom of that, of where I have a wedge, is going to be at 104.16. So it's way down there. But you can see how it's forming a really nice wedge.
Yes, it is.
Whether you use the other swing high or not. So that's what I saw, and that's why I was like, well, that we're at the top of a zone.
I can certainly see your rationale, and I think it right now it's really pretty much, it just broke through into making monthly highs right in here. This is the low came in first. We look down, so here's the low, beginning of the monthly low. We're talking higher time frames, very high time frames right now at monthly areas. But as we're into the new month, the low came in first. Now we're looking at a new high. And that's why I'm a little bit respectful of this area right in here. As it came up, broke through, started making new highs for the month. As the lows came in, now it's in a Now the question is, how high will it go? I'm going to think it's going to probably at least retest this area up here, which was the same area as over here at the beginning of the month when the high came low.
Which is what? What was that?
It's basically retesting the monthly high right now.
What was that number? The monthly high.
104.75.
Okay. Yeah, I will definitely be way out of that trade by then.
Yeah.
If it goes in that direction.
When
Which it sure it could.
When I see things being somewhat range bound or things don't give you the. Now, one thing I do like about this right now is I'm seeing an M. Here's the first leg of the M. Here's the middle of the M. Here's the retest. It didn't break the D, didn't break the high. Now I can see where this thing, as it's coming in to come out and retest the monthly open right here. You can see it's actually starting to break down here a little bit. The big question is, how low is it going to go? That's in lies the biggest question. Do I think it's going to go short? Yeah, I do think it can go short. Now the question is there enough to take the trade, to make it worth your while to take the trade into the area?
So
that's really what the question is. I think you're right. I think it's going to break down. I just don't want to take the trade because I don't think there's enough room for me to want to take it.
No worries. So let me tell you where my stick is actually at. So maybe that'll give you a little bit more of a confirmation. But my stick is actually all the way down to 104.22.
104.22.
Yeah. But I'm not going to take all that. I'm just going to take half the stick. So 50% of that.
So you're using the stick of this area right here?
Yeah.
Let's do that.
So I took, so the stick is 21 pips wide. And then I divided it in two. So just say 10 pip target. So we would end up at somewhere like, let me see if I can find a point that would make sense. 104.30 actually looks pretty good.
Which is the top of this other trap area that I have here.
Yeah, I like 104.30. But that's just a number that I'm throwing out there. I don't, just based on the previous price action. I'm learning what, how you guys do your...
The guru stalking.
Yeah, exactly. Even though I can make coffee at home, I still really enjoy McDonald's coffee. I don't know what they do to it, but it's still really good quality.
Well, let's see. We have a nice drop. We have a little bit of a wedge base coming in here. Now, if we can get a close below, well, this is going to be an interesting one to watch. I think we're both in agreement it's going to break down. The question is how far. That's where the deciding factor is. How far is it going to go?
Well, let's find out.
Yeah. See the 9th on the 9th. That's. Yeah, I can see it coming down to retest this low right in here. And this one I would like to, let's see, I'm going to move this one up. If I can move this up here. I want to see a close. This would be the area that I would be looking at here for, remember we have we did get the close below this area right here. So that's actually, we already have that. Well, too, let's take this trade and see what it looks like. See how it happens. There's once this, how much time do we have on this candle? 9 more seconds. Sell, I'm going to do the market. We're going to do a market sell. As soon as this candle closes, if it closes, we have a Strong move down, move up. We have the retest now with this 5-minute candle never closed above back into the wedge. So when this candle closes, I'm just going to take a market order. And we'll see what happens. This is from a 5-minute, and it says 4 minutes. It means that just get closed. Did we get that closed? Yeah, we did. Here we go. Market order, and then we're going to put a. How much of a stop do you want to use there, Pat? Or yeah, Pat. Yeah. I feel like our president, our vice president-elect, Matt.
Is that even official yet, or let's not even talk
No.
about that?
No, we're not even going to go down that road today.
All right, good, because I'd jump off that train pretty quick.
I would say, well, if we use the 15 minutes 62 as a trend following device, 104.47. So I'll put a stop at 104.47. That'll give us 6 pips. Okay, we can work with that. And the target is going to be, where's your target, Matt? I'm going to keep on you, Pat.
I don't know.
Where's your target? Down here? 36?
Yeah, 30.
104.
I had 30.
104.30. Then we can tweak that a little bit. So our stop is up here.
Yeah, once we start getting some basing and stuff, then you're gonna wanna.
Where'd the target go? Do we have the target in there?
Reevaluate it, maybe.
We can get the target in there. Target. Go a 12 pip target. There we go. So here is the break. Here's this target right here.
For the sake of everyone's sanity, I'll let you know when I decide to exit the trade.
Thank you.
Yeah, so we all agreed that it was gonna go down. Now the question right now, where my entry is I'm just right at break even. So it's only done about 2 pips so far. My 7 pip target would be, let's see, we got in at 41, so 7 pips is going to be 34. Right there, target 1. Which is pretty much right at the 30 minutes 62. Okay, so now we did get a cross of the green fib line. We are getting a challenge of the higher time frame trend line. We're only having a 2-point spread strength on the Japanese yen here. So here's the pass of the green fib line. I'll make this a little bit highlighted just so you can see it a little bit better. This is a 5-minute green. This is 5 minutes. Yep, those are 5 minutes. came down and crossed, couldn't hold it there. See, now this question is, can this candle close below the green fib line? So here's our 7 pips. See, we got in at 104.41. And let me mark our 5 pip area. $41 to $36. So this would be our 5 pip target. This would be our 7 pip target. We did get the pass. Now I'm still like to see it come back and recheck this.
Because it consolidated so much prior to breaking out, I'm not sure it's going to come back and do our check like we usually like.
Well, it already kind of passed off the alert that we got.
Yes,
it did the pass. Already did the pass and check. It did go back into the wedge, but it couldn't close above the wedge in the 5 minute. And it made 2 attempts right there. So that part was a little bit compelling that it was going to go. I still want to, and again, I like to see where I have the C mark before the wedge alert. I like to see it close below this area. So I actually probably should have made this enter on the close in this regard. We got the close. This one closed way below. Came back and retested. This is where the market makers were trying to get everybody sucked in, have them come in, have them take their stops. They grab the stops, and then they go and they run it back down again.
On a long term, I still think it's gonna go up again and break that previous high. I think
this one here,
like from a long term perspective.
Uh-huh.
Yeah, I think it's gonna come back up and retest that monthly high or whatnot you were talking about.
And it's coming up on the 5 pip target. Still don't have your spread covered in there, but you have 1 3/10 of a contract move, 3.5 contracts, 3.5 0.35 lot size. Right now you'd be up $15. Coming in retest, and right now it's testing at 30 minutes 62. So you are in the profit zone. Okay, Christine, what were your thoughts on this trade? At the early onset.
What?
At the early onset of this trade, what were your thoughts on this?
I was leaning a little bit towards your thought until when we drew out the wedge a little bit differently. Then I felt that you got earlier confirmation on it, so I kind of traded to Matt's team.
Oh, well, actually, I'm more interested in later on reviewing and seeing what the other wedge is going to look like from
the higher time frame one or the lower one.
No, the one that Al drew, the higher time frame.
Mm-hmm.
Yeah.
Okay.
So Al would have done his a little bit higher of a time frame. I drew mine a little bit lower.
Mm-hmm.
What I'm seeing right now is when I drew mine off the monthly range of this pair, it's really right now it's coming right back into the opening of the December 1st open.
Mm-hmm.
So basically, it's retesting the open. Once it broke through this green box that I drew, this was the opening candle, the level where this month opened up December 1st. Now, December 1st was also on a Tuesday, so there was a Monday, which is the week.
Oh, valid point. See, I wasn't even thinking that, but I can understand why you would.
So right now, it tagged your 5-pip profit, but it may not have filled because it has to go through 1.3 pips in order to get through to actually close that trade out.
What gave me a little bit more confirmation is the separation between the 5 and the 13. Like when um, prior to like where you have the enter and close there.
Okay, there's our 7-pip target range. There's our profit. And I'd say at this point, well done, Matt.
Oh, thank you, sir.
That's the winner of the day.
Wow, look at it go. This is actually the first time that I would have been profitable in a yen trade.
Oh, yeah.
I had you in the back of my mind there, Eva.
I drew it out, but I thought, no, I'm not taking it.
But you also see how it came right down into our trap zone right here. Well, it didn't even quite get into the trap, so it hasn't set the trap yet. Also, look at our RSIs right down. Right now, even the 8 is all the way down here at the 15 level. So but now if you start getting this thing, if you get this blue one to start hooking over, you may want to be taken along for the.
It's going to base before it turns around, though.
Probably so.
Like it's going to, because that's a significant break. So I see it filling up that downward candle before it.
Let's see the opening of the Monday. Let's see, Monday was on the November 30th, so that would be right here. So this was the November 30th. That's over here. So this is Monday. And the opening of Monday, let's just draw this a little bit differently here. That's the 29th. Here's the 30th. Why is that blue line not in the middle there?
Is that the $1 million question?
I think so. November 30th is, here's the 27th. So this is the 28th. Here's the 30th. Oh. This is strange. These are my daily lines right here. We'll take it over here to this. So here was the close. This was the close of the, it should be the Here's Friday's close right here, the 27th. So this would be Sunday. We'll just take it to Sunday. There was a close right there. So that's what we're, oh, come on.
The only reason I thought it was going to continue going down, like this is not the end of that that move there, is because the it's generally gonna create a big candle. What's the proper word for that? I can't think. But I still think it's going to come down even more. I think there's going to be one blue candle, and it's going to continue to the downside.
I think it's going to be a drop base and then a drop again.
That's what you're talking about.
Drop base drop.
Yeah.
We did make our target on this. It did come down and to retest the 3062, pulled down. That 15-minute candle couldn't hold it.
Is that a 15-minute candle close? Or is it just oh yeah, it was.
That was
okay.
I'm on the 15-minute chart right now. Let me go back to the 5 minutes, see what that looks like.
Start of the 15-minute candle went blue, so not too bad. We expected it to do that, right? If it started,
we expected a bounce off of the 3062.
Yeah.
Now we're going up to retest. But you can see here's your M formation right here. Here's your first leg of your M. Here's the middle of the M. Here's the second hump of the M. Couldn't quite break the B. And then it comes back down to make the last leg. And now you actually have a little trend line going from, so it did break this trend line. I'm going to move this one over to from here. That was the break of that, where the M was, and now we have we'll see where this falls, and then we'll see if it's going to keep on going. It's really important to be trying to find these M and W patterns. The M is usually at the top of the move, but it also needs to be at the top of a range as well in order for it to be valid. This was at the top of a range for the basically for this, well, pretty much near the top of the range for the week actually, and probably for the month, i.e. for the month. We had the M pattern. It was trending. It gave a nice long break, came back down, retested, couldn't hold that one. Here's your bottom of your M, of the middle of the M, comes back up, can't break through the top of the B, and now you got the break here, which is basically this is where the trend line wedge was drawn, and that gave us our nice little push down. Now, how far it goes, we don't really know, but we did get our 7 pips out of that. And this thing could go, it could go on down, but it's going to have to break through this area. And we don't have the cross there's a nice pullback, but it's still probably going to base a little bit to get these other moving averages crossing in the right direction. And we're getting some consolidation right here. You see where the 13, the 5, and the 62 on the 15-minute chart are all kind of consolidating right here. And actually right now, until you get this 3-period moving average to cross above the orange one, right now there's still downward pressure. Let's just see how far we can go with this. Let's just move it down a little bit more. There's 16 pips. We already got our first target. Now we're going to let one run and see how far it goes. You could probably use if you want to try and bring your stop down, just give yourself enough wiggle room. I bring your stop down to the 13-period moving average. Actually, probably where this other wedge broke, I'd probably keep it above that. Actually, I just leave it right where it is right now. Maybe want to break it if you took some profit. Maybe move it back to break even, just to not make a losing trade into a winning trade into a losing trade. Now you're in a risk-free trade. Now you can just see how far it's going to take you.
I like risk-free trades.
Yeah,
that's the best kind.
I also don't like giving back winning trades to break even either. I like taking my profits and moving on to the next trade. That's what I like to do. And it's just there's nothing, no right or wrong on that. It's just a matter of different trading styles, personalities. What works for me or what works for Matt doesn't always work for everybody else either. So you have to decide what works for you. What can that BT indicator between your ears, what is it like to see? How's it feel when you can let a trade run and make a lot, or how you feel if you let it be profitable and come back and take you out and give you a loss? I said, all we need is that 5 pips a day. Once you need one 5 pip trade a day on 2% of your account, and it's very lucrative. And I say right now, the target of 104.30 is probably a pretty good target. Pretty much right where we have this target. We did get a bags alert.
That was a pretty big pullback.
We did get a bags alert on this on that red candle, by the way.
Oh, you did?
Yep.
Okay.
And that was a sell at 104.30, 104.33.
I'm liking the way bags is working. I'm liking it after messing around with it.
Yeah, so basically it had this, what it did was on this candle right here, this red candle, when this red candle closed on the 15-minute chart, is said to take a buy right here. Now, what I like is waiting for this pullback, because a lot of times, especially if you see a big candle like this, you'll get that pullback. You can see it's just about ready to come back and stop me out here. So what I'm going to do is I'm going to move this one up, because I don't want to get. We're going to play this another little different way here. This thing was up, 20-some. Nice little, but now we're getting the pullback.
So this might be an entry for an additional sell if it comes back up.
I would look at this as being a bag entry to sell with a 40 pip stop and a 20 pip target. Nice little retracement of this trade.
Well, we'll see if it goes 38% of the move down.
And you see this came back all the way back. That's why I like taking my 7 pips. Coming all the way back, you're just about right back to, well, just.
Yeah, she's just short of the entry.
Yeah. So this would be an entry down here with the bags. I'll just mark that a little bit just so people can see how that piece of software works.
Did bag say short or long? I didn't hear you.
Set short.
So bags
Bag
was
says
designed.
It says to sell at 104.33.
So the bags was designed to take a 20 pip take profit.
Yes.
And a 40 pip stop loss.
Yep.
So the that's the settings out of the bag, literally. So that would actually end up pretty close to my stick target. That would be interesting.
Yeah.
That'd be very interesting.
And so a lot of times you see when it gets, especially when you get these really strong candles down, usually you're going to get a little bit better entry if you just wait a little bit. And just for the record, they have one for gold as well, right about the same time, to buy at 1844. I'm looking at that one right now. And that one I'm not so sure about. Although I can see the rationale. And we're almost to the 9 o'clock hour, so we can expect a little bit of move. Well, we already had the movement here in the last 15 minutes. Any questions, comments, anything we want to be looking at? Any other alerts we have? Nothing since 8 o'clock. Let's take a look at that US Swiss while we're playing around with this one. We had a US Swiss one earlier. We never really did chart that one out. And this was the overnight range. And this other white one is the weekly range, I believe is what I drew on this one. It's December 6th. Yep, this is the weekly range. And so right now this weekly candle is this is the green part of the candle. Right now we're in the red zone, going shorter. This was yesterday's low. It does help. I'm finding it very helpful to know where you are in reference to the daily candles and the daily day before candle and the daily and the weekly range. The market makers and the big institutions don't deal with 1 and 2 minute charts. They deal with things that look on a weekly and monthly basis and daily basis. So this was a wedge, and it was a descending, which is this one right up here. So right here where the wedge alert was, expand this out a little bit, and we had pretty much a flat bottom. Here's the high, so we're going to start with the triangle up here. Here's the low, here's the high, and we're going to flat bottom. There was the breakout, here was the break below, retest, and this is well past the, it's about, let's see, this was at 7:45. This is just before we came into the room today. This would be a red candle. This would be a neutral candle right in there.
Excuse me, Al.
Yes.
I know we like to just kind of get a reference as to where we are, like on the higher time frames. Um, and like I know for a little bit we were going to like the 4 hour. Is it just for today you're a little bit further out because of what you saw in the charts, or are you Um, just trying
Uh,
to see something a little different.
Yeah, I'm just trying to just show the same thing in different pictures. I think what was important, especially yesterday, watching the S&P just really tank uh, in a daily standpoint. It made a really strong move down. We're also looking at other probably other currencies as we get near the end of the year, and I think it's important to just see where you are in the curve of the big picture. I mean, we're trying to get our 7 pips out, but oftentimes, so it's been happening is we've been getting whipsawed because it's been in such a tight range. And even if you look like right now for the day, today's daily range, um, it's not really doing much other. I mean, here's what yesterday did, and it's just kind of hanging around. Now, once it breaks through that, the thing is it looking as is it trending? Are we getting into a trending market where it's, here's a high, lower high? This was an inside day right here. Didn't really go anywhere. Here's a high, made it a lower. So it's like high, a low, lower high, lower low. Now it retested this one. And so right now we're still pretty much in a sideways motion with making some lower high, lower lows right now. So it is actually defaulting more to the downside from a daily standpoint. But the question is, how low is it going to go, and how far back is it before this is where we're going to be finding our area where it's going to sit on. So I think it's important to know, because a lot of times we'll say, okay, well, it's going to break this point. Well, how far back do we have to go before we know where it's going to find that support and resistance level? And we've been doing that all along. We're just doing it in a little bit different fashion today, just to give a little different perspective, a little different picture.
Okay. Thank you.
And so like right now, this green box right here is basically the high that was made at the first of the month. And you can see where it came back up. It retested that. And now it's more in a downward trending. We can actually take this. Now it's coming back up to retest it. So it did make a little lower low here. So this part right here is from a daily standpoint, here's our new low. It's trending from, this is basically a red box. And here's where the market opened. There, right about there. So it went overnight and made a high. Now it's on the, now once it gets back up in this area, it'll probably come up and retest this one. Let's go back. So that's really nothing much on this one, other than the fact of possibly a retest of where the wedge alert was. How much room did we have? How much did it take to go down here on this one? This one down 1921 pips on that. Not too bad.
That's good.
It might come back up and retest the bottom of the wedge there, Al.
Yeah. That's kind of what I'm thinking. Let's see what a 15-minute looks like. Let's see if there's a 15-minute range on this. Here's our middle of our 15-minute zones right here. It's right in the middle of all this. If I were to take our trend tool, see where the middle areas are. I think I have the wrong tool. Yep, I do. Here's our red zone. Here's our green zone. It's right in the middle of the whole thing. Came down, retested within a portion of this. Actually, I like to do even better than using this tool here. This one gets a little bit busy sometimes.
Mm-hmm.
I like putting someone on 15 minutes. Yep, there's our 15-minute zones. So I'm going to put our 15-minute red. And I got my 15-minute green. I'm going to lock those. You can see it's inside of that range. Now, if I put my 5-minute bars on, you'll see we have our thirds right here. So this is the upper, so let me just move this up right in there. That's pretty close right there. So you can see where the month came in, got up to the new high. This is about where it came in, very close to where this red bar is. You see how it does keeps on respect, and you look at it, if it passes and checks it, it keeps on passing. Now it's just basing in here. This is really the range that it's in. Here's the overshoot area. And I think if I put my 2-minute bars on, you can see this is going to be right about where that 2-minute bar is. So right here is our, this would be the area, what I call the trap. And then down here would be the trap. And you can start just, and if you're looking where something's range bound, you want to keep trying to take trades, you may want to look at those little fib lines and see where the wicks came down and call that the trap, because that's where the price is trading back and forth, and may make a little bit higher highs, may make a little lower lows. But it's good. But if you look at trying to get in long down here and short up here, you might have a little bit better luck catching some in the middle and then go back to the means.
For me, I find it very helpful that like when we mark them up, sometimes, you know, as you're doing like right now, when I go back to just look at, you know, review it and you know, days later, you just can't remember all the trades. So it's, you know, it's very good like reference points, you know, and to know why, okay, why is that box, you know, there and things like that. So it's appreciated. Thank you.
Oh, good. You know, I said, like I said before, is that no matter what time frame you're looking at, you can find it either going sideways, or you can find it trending. What I like doing is find out where the sideways motion is and find out how it's trending inside that sideways motion. And so right now, I mean, you'll get the breakout, you get to the extreme, it comes back to the mean. This is really where the mean is up in here, this red box right here. That's really the mean. Once it breaks through that, it's probably going to come up here and hit the trap and it's come back to the mean again. So again, this is the area to be taking it short, and this is be the trap area to go long. This would be a trap to go short. In essence, this is the supply and demand. It's not really a supply zone because that's probably more of a higher time frame area, but I like, I kind of like this. It's one thing about it. If you enter long down here and you're wrong, you don't miss much. You don't lose much. You can put a pretty tight stop on. If you go short up here and you're wrong, you don't miss much. But if you're right, you've got this whole area to come back into. And this could, if this stays in this area, it could stay in the same area for a couple of days. And you could just keep taking it short, keep taking it long, keep taking it short, keep taking it long. And that's the way I would draw that one out. Let's see where this one's, oops, wrong one. US. What happened to my Euro US?
USJPY? Oh, no,
I think I said goodbye to it, I guess. And that one. Or is it? Oh, it's US yen. That's what we were looking at. Let's just do the same thing with this chart while we're at it here. And you can see where the crossover was. And right now it's coming up and retesting it. Everything's consolidating right here back into this wedge. And see what it's going to do. Now, if I take all these off and look and see where the daily range has been. Actually find out where my fib tools are. That's what I'm going to try and do here. Trying to find out where the fibs are, the 15-minute fibs. And we have a green, a blue. So this is right now, it's pretty much range from the overnight, it's ranging between the green and the blue area. And we have a red area down here. So it's right now, the blue is trying to decide whether it wants to go further along, or is this where it came out to get up into the extreme, this is the upper extreme, this is the lower extreme down here, all the way down below here. Here's the bottom. This would be your supply or your demand zone from the 15-minute fib standpoint. And then from the 15-minute fib standpoint to the upside, we're looking at this zone up here as supply. Now the question is, where does that really fall with what the prices have done? So if we look and see where, and then this is pretty much the middle range. So right now it's like an overshoot, or it's into a, now if it breaks out of this green area, then it's probably much heading on up to this area. So right now it's pretty much right in between a no man's land here. So
you can just basically go back to seeing that you're in like the no man's land, like when you break it up, in the thirds as you did
exactly
without the colors there,
exactly,
per se.
Exactly. So basically right now we're in between. This is our 15-minute range of the thirds of the 15-minute chart. This is our third range. We're in the middle. We're really pretty much at the top of one range and the bottom of the other one, because it's right at the blue line right here. So I'm going to make this 15-minute blue. Just double check, make sure we didn't get any new alerts here as we go through this exercise. And just a little exercise we're going to do here while we're waiting around.
I don't have any.
Yeah, I don't either. So, and now we're going to go to our 5-minute range. And you can see we're right at the green. Here's the red, here's the green, here's the blue. So we have two. This is basically a 5-minute blue up here as well. So here's the red, green, and blue here. Lock that. And so I'm going to be looking to see where the two-minute extreme. So here's an extreme here. Here's an extreme up here. So let's see where the 2-minute, and I can draw those 2-minute extreme boxes. So I would say here's the trap up here. And here's the trap down here. Here's the wick. And here would be the median, which should be pretty much here's where the prices are probably where the prices are starting to accumulate right in this area. It came in, broke out, came back up, came back out, broke out of here, came back, and coming back up in here.
Yeah.
Does that make sense to anybody?
Yes. It's
Probably
funny,
not.
right? Where you had put the upper mid-range line, like, because
Up here?
no, the orange box, your mid-range, top of your box. Even like I didn't realize at first that the red was right there, but when I was looking across, like as you were like placing the line, for me, like another thing that gave me like I guess I don't know if confirmation would be the appropriate word, but which gave me a little bit like thought was that, you know, if you look at that top line, like all of you have your closes that come to that top line, like straight across. I mean, there's quite a lot. So
You mean this one?
no, on your orange box, on the mid-range
this one,
box.
yeah,
Yeah, if
exactly.
your top line, which, you know, just really shows how strong that red fib is there.
Exactly.
So.
Yeah, actually, that you have a strong red fib line there, and you also have the let's see, where's the and you got the blue fib line right here on the. This is your 2-minute range, but the bottom is you can see basically where the price, and you see even like where we have our M, it came right back. The middle of the M came right into this, came back up, made a new high, came back into it, came back low, came back up into it. So this thing could be going like in this range for quite a while. And as long as, and what I'd be saying, advocating is that when it comes down here, take a long, wait for it comes back here, get out of the trade. Or if it comes breaks on up, or you could wait and see if it comes up and just ranges from here. But it would probably come down, get in, come up, take a profit, come back down, get in, go back up and take a profit. So you can see where.
Not to interrupt too much, but I might be potentially looking at another short in the UJ.
UJ, okay, let's take a look at. Well, that's where we are right now. So that helps to confirm what I was talking about.
Mm-hmm.
Let's try. So we're still in the same short. We already had some profit down below, and this pretty much helps to confirm what I was trying to say.
Mm-hmm.
Here's our M.
Oh, just from a little different perspective, I guess.
From a little different perspective.
Right.
So that you can get a third hit on a trend line, on a downward trend line from the tops almost, and that's what I was looking at. I was also looking at the base drop, like you like to say. And it failed to breach the trend line. So we'll see if it comes back up and tags the trend line. If it does, that'd be an awesome entry. But we're coming at the 9:30, so we'll see what happens.
And see, here's the other thing: is that if this area breaks, if it goes lower, it's probably going to come down into this area, which is where you have another red, and then you have the top of the blue. So this is our first trap. If it breaks, this is the overshoot of the trap. I would expect it to, if it comes down, if it keeps on trending, it's going to keep on coming down to trap area on up, trap area on up, trap area, and you can keep on cycling these down. Now we're talking about these 7, 12 pip ranges. If it comes down here and goes back to the median, it's just going to keep on going back. I mean, and there's plenty of room here, I think, for to get your pips out of it. From box to box, there's your 7 pip. There's your 7 pips.
Right.
It's marginal as far as but 7 pips are still 7 pips. The biggest thing is is your risk reward ratio adequate? If it comes up here into the bottom half of it, and here's the mid range of this zone. So basically, as long as it comes up, here's the trap area. Now, it may go, as it's trending, it may go a little bit deeper. So probably, I would not be surprised to see it come back into this area or just at the top of this area. And when we had the alert, which was all the way back at, let's see, this alert was at 8 o'clock. We put our alert on. And you can see the alert came right when this candle came right into this median. And then the question is, well, which way is it going to break? Well, it actually broke down into this area, came back up, retested. This actually might be the trade. As these hook down, let's take a look at what it looks like on the 5-minute chart. These fib lines are not there for, no, they really work very well. We don't always know which one it's going to stop on, but you can also see with the price action, oftentimes how things look. Matt, take over. I got a phone call I got to take real quick.
Oh, okay, no worries. So we're just gonna continue watching this for a little bit and see where price is gonna interact. There's not really any more action. If it comes back up and tags the trend line, then I would potentially look at another short on that same trade. But other than that, I guess we're just gonna sit down and smell the roses as we're waiting.
Okay, I'm back.
Oh, that was quick.
Yeah, it was the wrong number.
Oh, okay.
It was,
That's-
well, it was
that's
an
a good
interesting,
thing.
it was an interesting wrong number, but it was a weird wrong number. Yeah.
We're just waiting to see if it's going to tag the bottom of the trend line. If it does, then there might be a opportunity to enter a second short, but we'll see.
So which trend line are you looking for this thing to tag?
Oh, the bottom of the wedge.
To enter another short here? At the bottom of this one? Oh, draw a wedge on this one?
Yeah. Yeah.
And here's a low, here's a high, here's a bottom.
Oh, you cleaned up your charts. That's why.
Yeah.
Okay. Okay.
But basically we have a nice little drop. Here's another low wedge. So this is almost like the flag pattern that we often talk about. And we can look at, here's the beginning of the move. Here's the top of this down move right here. We're on a 15-minute chart. And this is where you can almost look for that flag retracement where it comes down to here. It retraces back up. It retraced up your 40%. And then the new target's going to be coming down here at the, right here, pretty much in our secondary trap area or target area. We could be looking at this as the target. This is a potential target here. And I'd be more apt to look at this with the red line to the green line into this zone right here. Potentially.
This is one of our better RCS spreads on this pair this morning.
Yeah, we haven't. They were all pretty tight, weren't they?
Yeah, especially yeah.
Yeah, it's starting to. Now it's starting to show that the Japanese yen is starting to take over the U.S. dollar. Dollar is still number 3 on the whole list at the 15-minute level, and now the Japanese yen is actually now the strongest.
Right.
Which Japanese yen is the second currency of the pair, which makes it going stronger to the short side. We finally had the spread by 3. And we have our target in here. I'll make this our target. It may take a little while to get down there. If it can break through this, what I call this trap, if it can break through that, it should go on down lower. We do have the strength right now on the RSIs. The blue one crossed the orange below the 40-60 range, and see if it come back down and retest. And it's now 9:30, and the market is now opening. And we'll go for about another half an hour here.
Sorry, if it's bothering me, I'm gonna mute me.
One of the greatest inventions they've made in the last couple of years was water-resistant keyboards.
Did you spill something?
Yeah, my coffee.
Your McDonald's coffee?
Mm-hmm. Yeah, I spilt it. Spilt part of it. The cover kept most of it in there, but had a little bit of a mess to clean up. Because I drink it black, I'm not worried about the sugar caramelizing and messing up the keys. So
Speaking of coffee, half the time I forgot I have some sitting here.
Excuse me, I need to skip away for a bit.
Okay, well, I think we're, as we
Yep.
have about 30 more minutes, but looks like things are pretty quiet today. We may shut off earlier today.
yeah, it's pretty much done. I think we got our trade, and
Yeah,
we're
we're not getting any new alerts.
nope. Nothing in bags either.
Nope.
And that was halfway to the stick. It ended up being at the end of the time there. So that was not bad.
Here's the yen is starting to come back into either the trap zone or it's going to break through into our target zone. This is where it's sort of important to kind of keep your stop where it is on these pullbacks. It's nice when you can take a couple different positions. Just take profit on one, wait for the pullback, take another position, and then just let one, or as it comes back down here, take another profit and just keep letting one run. And that's so you can catch these bigger moves with, but you need, I usually like 3 different positions. I'd rather have 3 small positions where I can take one off at a time. But you have to have the account size to be able to do that. And with the US yen, I'm happy with that. And I'm going to close this one out. And with that, I'm going to look and try my strategy here and see how this thing works. Here is our trap area, and I believe this. I'd like to see this thing come up on a lower time frame, start moving in the other direction. It's not quite there yet. Let's go into our 1 minute chart or a 5 minute chart and see where the pullback may come. Right now, they're still pointing down, still pointing down. We still have the 8-hole moving averages are still red all the way across. Our range, our RCS tool still says that the Japanese yen is the stronger, but only by one, and by one. So this could be near the end of the move as it comes down in. This could be that last little push down for a retrace. And it should be looking right around the 24.19 area for the target, which is pretty much right where it's headed. Here's our 15-minute fib line. It's getting a bounce off of that.
Yep, and I'm satisfied with that. I'm out of that one as well.
This is it came right to this 15-minute fib line, right into this zone. I think once it comes back out and closes above, I'll be looking to take it long. And see where it comes back to the mean again. It still might come down and hit this target. Let's see where a 2-minute line is on this.
LIS. Sorry, guys. Little guy. Yeah, I would say that good trend lines are game changers. A lot of people make fun of trend lines because they're so simple, but you put a good trend line, it'll put money in the bank.
Yep. Yeah, right now I'm still looking to see for this thing to get a crossover, see if it can come out of the this zone. Still looking for the target zone.
I don't know, Al. I think it's going to keep on coming down
Yeah, I
for a
think it
bit.
might. It still has. It's really kind of hanging down real low down in here.
Yeah,
I
I
think
don't.
it's. Yeah.
It's going to catch my stick in the next, what, 5 pips, bottom of my stick. And then I got a big trend line at 104.20. So I'm not a betting man,
You
but
guys here from Leslie. She says, good session today. I really enjoyed your back and forth, Al and Matt. It's helpful to see and understand different perspectives. I like that you can both discuss what you see and have respect with each other. Not everyone can do that. That's really nice.
Oh, thank you, Leslie.
thanks.
Well, we're always glad to have you here, Leslie. Thanks for the comments, and we look forward to seeing you. Looking forward to seeing you again. And I said, anytime you're ready to turn your mic on and ask questions, feel free to do so. We enjoy that from the attendees.
Always. So I'll continue testing bags as we go through the rest of the morning here. So other than that, I think
we're pretty much done. I think
I'm done. I'm content.
So, yep. So thank you very much for coming in. I think it's been a good session, and we'll see everybody tomorrow. Have a great day.
All right. See
y'all
you guys all
tomorrow.
later.
Bye.
Bye.